Picture this. Your mom worked hard her entire life. Her parents did the same. They paid the bills, kept food on the table, helped family whenever they could, and maybe even managed to buy a home. From the outside, it looked like the family was moving forward. But then, one generation passes away, and somehow the next finds itself back in survival mode. The house has to be sold. Whatever savings existed disappear into funeral expenses, medical bills, and old debt. Family members argue over what is left. The grandchildren end up starting from zero. A family that looked financially stable realizes there was never a real safety net underneath it. That is one of the most heartbreaking financial realities facing many Black families in America. The challenge isn't only building wealth, it's keeping that wealth alive long enough to benefit the next generation. The biggest misunderstanding is thinking that income and wealth are the same thing. They're not. Income is what you earn. Wealth is what you keep. Wealth is what protects your family when life goes sideways. It's what gets passed down. It's the difference between experiencing a setback and facing a financial collapse. That's why two families with similar incomes can live in completely different financial realities. One family deals with an unexpected car repair and thinks that's frustrating. Another gets the exact same repair bill and wonders whether they'll be able to pay rent that month. Research from the Brookings Institution found that in 2019, Black households held an average of about $1,500 in liquid assets, compared with roughly $8,100 for white households. They also found that 72% of white households believed they could quickly borrow $3,000 from family or friends during an emergency, compared with only 41% of Black households. That tells us something important. Many Black families aren't just operating with less cash. They're operating with less financial backup. And when there's no backup, wealth doesn't just grow more slowly. It disappears much faster. This is where generational wealth often slips away. Not because of some massive stock market crash or an elaborate scam, but because of ordinary life. A funeral, a hospital stay, a layoff, a roof that suddenly needs replacing, an aging parent who needs care, a child who needs financial help. One emergency after another slowly eats away at whatever savings a family managed to build. That's why emergency savings matter so much. They're not boring. They're not optional. They are protection. The Consumer Financial Protection Bureau points out that even a modest emergency fund can help families recover from unexpected financial shocks and prevent a temporary setback from turning into years of debt. They recommend setting clear savings goals, automating transfers whenever possible, and continuing to save even small amounts during difficult times. Sometimes wealth disappears simply because it never had the chance to become wealth. It kept getting pulled back into survival. Now let's talk about one of the biggest misconceptions in our community. Owning a home can absolutely be one of the strongest financial moves a family ever makes. But a house by itself is not a complete wealth strategy. The Federal Reserve has found that much of the increase in Black household wealth has come from rising home values, while average liquid wealth has actually declined. In other words, many families appeared wealthier on paper while still struggling to cover everyday expenses. That's because home equity isn't the same as having money in your checking account or emergency savings when monthly bills come due. That's an especially difficult reality for older generations who were taught that buying a home was the finish line. It isn't. It's an important milestone, but it's only one piece of the puzzle. Because if the next generation inherits a house but no cash, no will, no life insurance, no maintenance fund, and no organized paperwork, that home can quickly become a financial burden instead of a financial blessing. Something that was built through decades of sacrifice can easily turn into confusion, legal problems, or forced sales. For many Black families, the issue isn't simply missing an inheritance. It's missing the entire system that creates one. Research consistently shows that white families are significantly more likely to receive major financial transfers during their lifetime or through inheritance. They're also much more likely to receive multiple transfers and substantially larger ones. So when one young adult gets help paying for college, receives assistance buying a first car, gets money for a down payment, or simply knows they have family they can fall back on during hard times, while another receives none of those advantages, those aren't small differences. That's how the wealth gap continues from one generation to the next. One of the hardest truths is that education by itself doesn't completely erase this problem. The Federal Reserve Bank of Richmond has found that parental education is much less likely to translate into financial transfers for Black families. So even when parents earn degrees, build careers, and do everything society tells them to do, the next generation often still doesn't receive the same financial head start. Too often, children inherit determination instead of assets, and wealth isn't lost only through major crises. Sometimes it disappears a little at a time through constant financial friction, check cashing fees, overdraft charges, higher insurance premiums, loan denials, expensive borrowing terms, limited relationships with banks or credit unions, lack of access to affordable credit, and simply never being taught the difference between an appreciating asset and a growing liability. Small financial disadvantages repeated year after year can quietly prevent wealth from ever taking root. The challenge doesn't stop there. The Federal Deposit Insurance Corporation reported that in 2023, Black households were still far more likely than white households to be unbanked, 6%. Compared with just 1%. Families without access to traditional banking are also much more likely to rely on alternative financial services for everyday needs. That often means paying higher fees, receiving fewer consumer protections, and missing opportunities to build healthy, long-term financial habits. And that matters, because when your money is constantly flowing through expensive financial systems, it loses strength before it ever has the chance to grow. So what is it that families actually pass down? Think about it this way. Every family leaves something behind. Some pass down fully paid-off homes or other valuable assets. Some pass down debt. Some pass down discipline and financial responsibility. Others pass down confusion and uncertainty. Some leave behind a successful business. Others leave behind fear whenever money comes up. If the next generation never learns what money is supposed to accomplish, what separates an asset from a liability, how to protect property, or how to avoid losing wealth through unnecessary fees and poor financial decisions, then even decades of sacrifice can disappear within a single generation. That's why this conversation isn't only about dollars and cents. It's about stewardship. It's about making sure the next generation inherits knowledge along with whatever assets they receive, because a home without a will can become a legal nightmare. Savings without designated beneficiaries can create unnecessary complications. Life insurance without a clear plan can fail to accomplish its purpose. A family business without prepared successors often struggles to survive. Passing down assets isn't enough. We have to pass down understanding. So where do we begin? First, we stop acting like wealth begins with investing. Sometimes building wealth starts with something much more basic: getting organized, having a checking or savings account at a trusted bank or credit union, following a written budget, building even a modest emergency fund, paying down high-interest debt, setting up automatic savings, creating a will, naming beneficiaries, carrying life insurance that actually matches your family's needs, keeping important documents organized where your loved ones can find them. Paving the conversations that most families avoid. None of that is small. That's the foundation every financially strong family is built on. The Consumer Financial Protection Bureau recommends setting specific savings goals, automating contributions whenever possible, tracking progress consistently, and using unexpected money, like tax refunds, to strengthen emergency savings more quickly. Those steps may sound simple, but simple habits become incredibly powerful when a family has spent generations living one emergency away from financial hardship. Second, we need to broaden our definition of wealth. Wealth isn't just earning a good income. It isn't spending thousands on a funeral. It isn't owning a car free and clear. And it isn't simply owning a home without a plan for what happens next. Real wealth is assets supported by systems. Finally, we have to start teaching the next generation much earlier. Not after they waste their first paycheck. Not after they're buried in debt. Not after someone passes away and the family is left scrambling. Early, teach them how banking works. Teach them how to build and protect their credit. Teach them how investing creates long-term wealth. Teach them what ownership really means. And most importantly, teach them that keeping money is every bit as important as earning it.